Hello, I'm Landon Smith with Remax Professionals and the Dreamsmith team, and I'm here to tell you about all of the lending options that you have when you are buying your first home. And so let me walk you through it. We're going to go deep dive into this. And the first one that's easy to explain is a conventional loan. Okay, conventional financing is your typical financing. Usually that starts at about 97% loan, so 3% down payment. They have options at 95, 90, 85, and 80. And it's a great way to go. It's the lowest cost loan, so there's the least amount of costs associated with it. So more of your money can go towards principal of paying down the loan rather than going towards fees and interest. So that's a great loan type if you can afford to do that and you have a down payment saved up. There are lower debt to income ratios with this one. So when a lender looks at your profile, they're going to say, okay, how much income do you have compared to the amount of debt you have? And usually conventional loans, you can go all the way up to about 43%. On FHA loans, which is the next one I'll talk about, you can go all the way up to like 55%. And a lender can explain a deeper dive of how that works. But basically, you have more forgiveness on those FHA loans. They're willing to go up a little bit higher for you. So if you can't meet the parameters of conventional, then FHA is a great way to go. And interest rates on FHA loans tend to be a little lower to, combat some of the costs. There are some extra fees with FHA. And, typically you have a funding fee, and then there's also mortgage interest mortgage insurance costs as well associated with FHA. And so be aware of that. It's still better than not buying a house and renting in most scenarios. I would absolutely go forward with an FHA loan with confidence. Right now, FHA loans tend to be about 0.5% less than conventional loans. So your payment may work out to be just slightly higher, but not too much worse than what a conventional loan would be. The next option I want to tell you about is USDA loans. So USDA loans are rural land loans. Basically, you can buy a single family house or a type of home with these that is geographically located in the USDA zone. So there's a map for that, and that map looks like this, right, in the Denver metro area, so that you can see if where you are looking and where you're interested in actually qualifies for the USDA region. There are some great advantages to USDA loans as far as like lower down payment. Also, that you don't have to pay mortgage insurance, which is pretty awesome. So you can save on some costs and have, again, more of that money go towards your principal so that you're paying down the loan faster. Another option is CHFA, okay? CHFA. And CHFA loans are pretty cool because they allow you to not bring so much of a down payment. And they'll grant you up to 4% of the price of the home here in Colorado. So that's a pretty awesome deal. When you're short on cash, you need some help from the government, they'll grant you that money, which is pretty cool. And that can go towards your down payment or towards closing costs. So a lot of people really appreciate that. There are a little bit of a cost factor in the loan. There's additional fees, and interest tends to be a little bit higher than most loans because of the added benefit of saving you some cash up front. And so that's how the lender makes back their money on the risk that they're taking with a loan that's leveraged a little bit higher, if that makes sense. And again, if you have any questions about these, feel free to reach out in the comments below, and I'm happy to go deeper or connect you with our preferred lenders. We've got some great lenders that we can connect you with to make sure that you understand everything and you're totally clear on what you're getting into for the next 30 years. It's a big commitment. So, unless you're refinancing or selling before then, which most people do, most people see it as a pretty good size commitment. So hopefully that's been helpful. There's also VA loans, and the VA loans are only for veterans who have served in the military, either active or have served in the past. And man, we're grateful for our veterans. We love those people that have served our country so well, and the benefits that they get are no mortgage insurance, so they don't have to pay that extra $200 or $300 a month, and no down payment requirements. So you can do 100% down on VA. You can actually go up just as high as your income will allow. They're pretty generous with the debt to income ratio on those, and don't cap them a whole lot. So it's really nice for veterans to be able to have a loan type like this that can save them some money, and they've earned it. So we appreciate you and all you've done for our country. So those are the basic loan types. There's also portfolio loans that you can get from like banks, right? From like First Bank, Vectra Bank, maybe even credit unions also offer their portfolio loans. What does that mean? What's a portfolio loan? So really all that means is that they don't follow the guidelines of Fannie Mae and Freddie Mac, which are the two huge conglomerate lenders on the secondary market. Okay, so that's where everybody buys their loans through basically. And so if they don't follow those laws, then they can do things that you can't do in the Freddie Mac, Fannie Mae systems. And so they're basically using their own money. So if you have your own money and capital that you've raised as a bank, then they can start offering their own money to people and make the rules for that money to a certain extent. Obviously, there's federal guidelines and stuff, but they can say, yeah, we'll work with self-employed people who haven't been working for 2 years, right? Or yeah, we'll take bank statement loans. As long as you have a good bank statement, it looks good, we'll work with you. In condo communities, some of the condo communities are deemed non-warrantable because they don't have enough reserves, or maybe there's a lawsuit in the community or something like that. Portfolio lender can say, yeah, I understand that, but I don't care. We'll still lend on the property. Or Freddie Mac and Fannie Mae will say, loan is canceled. So there's that route to go. Usually on these portfolio loan options, though, you got to have about 10% down for most of them for it to work out for you. So that's the rundown on the portfolio stuff. Credit unions are a great way to go as a secondary source if you're not finding what you're looking for in the lending market. Sometimes they can do things that other banks and lenders don't do. And then understand also that mortgage brokers are there to basically broker out to a number of different platforms and different banks, right? Like our mortgage brokers, they may, broker out to, they're working with a buyer, and then they go out to Rocket Loans and say, hey, Rocket, what kind of rates do you guys have? What fits this client? And then Bank of America, Wells Fargo, US Bank, all these other huge banks that are on the secondary market too. They may reach out to several of them to find the best loan for you and then get that best interest rate that is being offered from any of them. So that's the advantage of working with a mortgage broker, is they're going to shop that market for you and make sure that they're getting you the best rate. I have seen some pretty competitive rates from like Wells Fargo Direct sometimes. It just depends on the capacity of the lender that you're working with. And we've got some good ones at some of the banks too that do a great job and serve people well. So hopefully this has been a really helpful rundown for you as far as different lending options out there, so that you can make sure that you're saving as much interest as possible and getting the best deal, on your purchase when you come here to Colorado to purchase your first home. And by the way, it's an exciting time. I'm super excited for you. If you're in that point in your life, do it before the average. The average is 38 years old right now. If you can do it before then, you'll set yourself up so good as a homeowner for appreciation, so that you can make a lot of money and have your home be a great investment for you down the road. And again, if you need a lending connection, give me a call. I'm happy to connect you with one of our awesome lenders that can walk you through these at even a deeper level. But hopefully you've been able to learn a lot. And if you liked it, comment below. I'd love to hear your remarks, and I'd love to hear that you're watching these videos and enjoying them, and that we're providing some value to you. So thanks again for listening. Please subscribe if you want to see more videos like this one, and we'll catch you next time.